Well, good morning, everyone. Hopefully you're all awesome and well. Still having a bit of a challenge getting onto a couple of the channels, but hopefully a bunch of you guys are on this morning. Good to see you there, Hardik. An engineering lesson this morning, or maybe some financial engineering, Hardik. Who knows? Let's fingers crossed we can get the hang of it this morning. Welcome to another Wealth Coffee Chat for those who are on right now. Great to see all of you guys jumping on this morning. Give us a shout out in the chat. If you're there, make sure I'm coming through loud and clear and things are fine. It seems I'm having some tech challenges these last couple of days. So anyway, I'll see if I can work that out. Hey, good morning, Di. Good to see you there. As we kick off the morning. Anyone who's new, good morning to you. Thanks for joining us. If you're new to the morning Wealth Coffee Chat, Jason Witten's my name. If you haven't met me before, and been property investing over 20 years, helping property investors across Australia and New Zealand build their property portfolios. We've got a couple of sayings around here. Buy well, never sell. This thing's a marathon, not a sprint. And the regulars know that, like the regulars like Stephen and Bob. Good to see you guys on again this morning as well. But let's kick off this morning. Talk about the engines of wealth. Many years ago, I'm a bit of a self-confessed, hey morning Kim, thank you. I'm a bit of a self-confessed personal development junkie. I've invested many hundreds of thousands of dollars into my own personal education across all different categories in life. Mental, emotional, spiritual, financial, business, you name it, relationships, etc. I'm always a bit of an avid studier, and many years ago, I went to a seminar called Business Mastery. I don't know if anyone has heard of Business Mastery. Tony Robbins, one of the best teachers in the world. And I'll put my old coffee down. One of the best teachers in the world. And he had a funds management guru there who manages billions and billions of dollars of people's funds, talking about the engines of wealth, talking about how professionals, people who manage money and wealth for a living, approach the idea of investing. And it was very different, a very different conversation to what I'd heard in the past. So I want to talk you guys through that this morning as we dive in and jump into it. So good morning to Sean and James jumping on as well. So good to see you guys here. Michelle, there you are. A few of the regulars up and at it this morning. For some of you guys, you're not getting the notifications because unfortunately some of my channels aren't going live. So something must have gone wrong. I'm going to have to go back in and connect them and make sure they all get going. But anyway, we'll dive into it this morning. Engine 1, Engine 2. And the idea that when we're investing, many inexperienced or uneducated investors think that life should be exciting. This idea of investing is exciting. Now, the idea of learning about investing should be exciting. The process of buying an investment or having an allocation of money go into an asset should be fairly emotionless, was the word the investor that I was talking to many years ago described, and I want to take you guys through that this morning. So let's have a look at the two versions of the world of the investing space. And this was the idea, this was the infrastructure that this investor, this professional investor gave me. And I'm going to share that with you guys this morning about the idea of one engine of wealth and a second engine of wealth. The first engine of wealth should be, I'm going to change that little color and put that here. Reliable. Reliable, okay? Something that is proven, has a track record. Track record. Something that has some, he was talking about volume and momentum. The idea that it was widely adopted. There was some regulation, etc. And for the most part, everybody, if you mention this idea, if everybody knows about it, okay? So what right now, if you think about this right now, team, you know, an investment, an idea, some asset that you would put your money in has a long-term track record, lots of volume and momentum, completely widely adopted. It has regulation and rules and whatever. Some people don't like those. And everybody in the whole of, society knows about it. Tell me right now, what type of reliable, and it doesn't mean reliable as in outcome, but reliable understanding, knowledge, information. What type of investment would you say right now, having a look at that, would fit into engine number one? What do you guys think? Chuck that in the chat for me. While I do a little, I'm going to move something around. Put it in the chat. What do you guys think? What would fit into engine number one in our investment place right now? What do you guys think? Move that over there. Is this a trick question? No, it's not a trick question, Michelle. It should be an easy one for all of us right now. But there you go. Property. Sharon's onto it. Yep, chuck it out there. At the end of the day, we're all investing in this one. Property. Okay, let's go through property. That's not a very good colour. Let's put a different colour up there. Let's put purple. Maybe purple works better. Hopefully you can see it. Sometimes the background, oh, that's hideous, isn't it? Got to get it right. Actually, black's probably going to work best, isn't it? All right, let's just do the black one. All right, property. Okay, property is reliable. Team, real estate, Hardick, onto it. James, Stephen, you're right. It's got a track record. It's got a track record in Australia, a couple of 100 years. The volume and momentum, it is $1 trillion market, trillions and trillions and trillions. It's very difficult to sort of manipulate it in a weird way. It's widely adopted. Everyone has to bloody live somewhere. So, it's probably the most widely adopted asset on the planet, let's face it. It's got regulation. Yes, it has regulation. There's rules and whatever. Now, we might not like it, but it has a zone of safety for money, for storage, where we put our cash, our dollars and cents, and everybody knows about it, okay? Everybody knows about it. So, and let's just have a little look at two other places. The share market, like the shares, the ASX, the whatever it might be, and then you've got potentially, business, okay? So when we look at this from an investment point of view, if we look at, track record, volume, those sorts of things, if we are looking at how we invest and where we put our money and those sorts of things, then you want the majority of your assets in reliable asset engines, right? You want them in a reliable place. Now, I'm going to get rid of business there because that just confuses the conversation this morning, because businesses by default are the share market, okay? And away you go. At the end of the day, you have some money you've exchanged some time, some knowledge, some effort in the marketplace, and you have created some cash capital, you've created some value, you have to transform it into something else and store it there. Like the worst place on the planet is to store money in a bank account, okay, in cash. It is absolutely rubbish, okay? So if we, through this engine idea, put it in a reliable asset, whatever that might be, I don't mind, property shares, they both have these really good track records, volumes, widely adopted, regulations, everybody knows about them. Okay, that's kind of cool. What does that mean? When we have, let's say, a bunch of money, I'm just going to put up here, if you've got $1 million and you wanted to invest it, how would you invest it across the two engines, okay? And I haven't explained engine number 2 yet. Maybe I should get to that so you can put this in context. A reliable engine and an experimental. They called it experimental. I might call it new, whatever it might be. So over here, it's the opposite. It doesn't have a track record, or low to no track record. B, its volume and momentum is maybe questionable. It's not necessarily widely adopted, the whole planet. Regulation, doesn't have regulation, no regulation, and not everybody knows about it, okay? They don't know about it yet. So the idea, if you see this reliable stuff, the returns on reliable investments tend to be lower. But the risk is also often lower, all right? Over here, if you've got something experimental, the idea might be something like, actually chuck it in the chat for me, what sort of investment at the moment is quite experimental? And I'm not talking about like a mad scientist experiment, because at this point in time, it ticks 1 or 2 of these boxes, but not all of it. What's something that's quite popular at the moment that everyone's piling into? A lot of people are piling into, but it's certainly not absolutely integrated mainstream in our investment world just yet. Chuck that one in the chat for me. If you're sitting there, go, what's an experimental investment process where you'd put some of your money when it comes to this world? Yeah, Michelle, James, Allison, you're on it. Crypto, there you go. IPOs, yes, absolutely, Stephen. So over here, you might have IPOs, that's initial public offering, some new idea, some new business, something that might be coming to market, and crypto. All right, crypto and all the other things that go. NFTs, yep, Digicoin, exactly, Justin. So if we were sitting here as investors today and we said, all right, up here we have $1 million, $1 million, and you were sort of like, all right, I'm an investor, I want to put some money into the market. What percentages, if you wanted to play, and this was the thing, that professional investor said you should always be in both markets, okay? He said you should always be in both markets, the reliable market and the experimental market, for 2 reasons. Number one, when you're in the experimental market, you're learning new things, and maybe, just maybe, some of these things give you a boost to your returns, okay? So hopefully you're following along here with what I'm trying to sort of share and teach today. So right now you're sitting there and we've got $1 million to invest. You've got $1 million to invest across reliable engine number 1 and experimental engine number 2. What percentage of this $1 million would you allocate in these boxes? Chuck that in the chat for me right now. You're sitting there, you've got $1 million. What would you do? And over here, I would put things like joint ventures, small developments, stuff like that. Developments, okay? JV developments, those sorts of things. So chuck that in the chat for me. You've got $1 million. Engine number one, engine number two. What percentage would you allocate? How would you invest? And we'll see the percentage of what a professional billionaire funds manager says to us as investors. See if you're about right. So chuck that in the chat. Di says 70-30. Danny's 70-30. Stephen's 90-10. What else have you guys got in there? Anyone else got anything different? 80-20. James 70-30. Yeah. All right, well, we got 70-30 to 90-10. Very interesting. The professionals, his world was 90-10, right? 90-10. What he did say, as these things became not necessarily experimental anymore, but they were moving across here, he would increase that exposure once they understood and really started to make momentum. So it was 90-10. And so over here, if you think about it, let's say, for example, joint ventures and developments, they came out of here and over here. That might go to 30, 70-30 when it comes to the allocation dollar per dollar or whatever it might be. Because what happens as investors is our returns, and let's just start a new page here. So engine one and engine two. So let's say engine one, we're getting a 5% return, and that's fantastic, it's reliable. But in engine two, over here, an experimental return might be 20%. Might be 20%. But if we had right now $1 million, so $900,000, 900K in our returns, and you go, right, $900,000 times that by 5% equals 45K. Okay, that's a 5% return, tick in the box. Over here, we have 100K invested. That's $20,000. 20K. All right. So if we add our 20K plus our 45K, our return, our total return out of both engines, goes for our $1 million, goes to 65K, and that makes it 6.5%. Does that make sense? Hopefully it makes sense, team. It sounded much better potentially in my head than on paper today. So you only need a small amount to increase your return over here by quite a lot, 1.5%. You only need a small amount invested, getting a bigger return. You've got the most of your money in a safe place, and with the exposure here, this gives you that extra boost, that extra bump. Now, for all of us, what happens if this goes pear-shaped and you lose the 100K? Okay, this is only got to go up 11% to give you back your $100,000. Okay, everyone cool with that? Everyone cool with that? Right. Because for some of you guys, let's say Danny or Di, James, if you had 30% over here and you dusted it all, now this has got to go up 30, about 30%, actually 30, it's got to go up 35%. That's got to go up 35% to give you your capital back. Okay? And that's the rationale What can you afford to lose in engine number 2, the experimental engine that won't mess with your wealth and momentum much, if anything? Okay? Hopefully that made sense. Because if you lose a good chunk of your capital base, your wealth base, then the setback can be pretty significant. Okay? As we're going along. Anyway, Wealth Coffee Chat done and dusted for today. Engine number 1, engine number 2. We should be investing in both. The percentages should be small until you understand and really understand these assets. That's why with crypto, gang, it's the fucking Wild West. It's mad, right? It's actually even worse than going to the casino. At least the casino's got some rules, right? At least the racetrack's got some rules. Anyway, but it doesn't mean you shouldn't be invested in them. I am. Doesn't mean I'm encouraging you to. Just understand. Don't put the bloody whole lot on something you've got no idea about, okay? Anyway, hopefully that makes sense. There you go. Anyway, I'll stop rabbiting on. Wealth Coffee Chat done and dusted. How much have you got in reliable investments? How much have you got in experimental investments? And don't put too much in the wrong one, that one, until you understand deeply those asset classes. All right, gang. You guys be awesome. Be well. That's it, I think. Wealth Coffee Chat, done and dusted. Over and out. See you guys tomorrow, around about the same time, 8:05. And hopefully I can fix up my stuff on my internet. All right. Oh, hey, Nicole. Yeah, no problem. Just put it in the chat, Nicole. Put it in the chat and we'll see it and we'll take that and do a Wealth Coffee Chat on it. Thanks, Nicole. Appreciate you thinking of it. So whack it in there, buddy. All right. See you, team.